All right, so just a quick update on Bitcoin. In Monday's video, we pointed out how the $73,000 range would probably result in a little bit of a rejection. Whether it would be short lived or not, we weren't really sure, but I sort of expected it to at least act as a little bit of resistance because the $73,000 level correlates to the fib level, the 4.236 fib level on the original all-time high back in November of 2017. So back in November of 2017, when Bitcoin just stopped shy of $20,000, when we performed the fib retracement on that peak and then subsequent bottom, that results in a 4.236 of $73,000. And as we were approaching that level, I thought, I wonder if that would actually act as resistance, as resistance, because people are still trading off of these prior moves. If we zoom into the daily and we look at yesterday's candle, which closed about 3.5 hours ago, you can see we got a pretty decent rejection when it hit that level of $73,000. Ended up being about a 6% drawdown. Again, it was really, really quick. It all happened within the course of a day. And we are once again looking at a pretty long-legged candle. And when you see these really long-legged candles, that's typically pretty bullish. Again, we're forming a little bit of a flat top. Wouldn't be surprised to maybe fill in this area a little bit yet. We came all the way down to 68, the high 68 range. 68, 687 looks like was about the bottom of that candle, somewhere in there. So yeah, it tipped back below $70,000 there for a brief minute. It all actually happened in 1 hourly candle. Let's see, how quick did this actually happen? Yeah, almost over the course of about 5 minutes. And again, as I keep mentioning, when we're getting these flash dips and they are immediately bought and pushed back up above a major price level like $70,000, that is really only bullish. Again, the sentiment could very quickly change. I just don't anticipate that happening. There's just too much buying pressure right now, too much buying interest. And, we could be looking at another one of these types of formations where we got our red daily candle, pretty substantial daily candle with a long leg. I would not be shocked to see this run up to, try for 80,000. I don't even think $75,000 is really going to serve as any sort of resistance, even though it is an interesting round psychological number. I don't think technically there's any significance to it. I do think that there is a lot of significance to this $83,000 range, maybe just shy of it. Probably closer to maybe $82,000 or even just shy of $82,000. The reason why that level is looking important right now is because number one, yeah, that's kind of redundant. We are very extended. I mean, there's really no denying the fact that we are on a massive run. And while there is no telling how far this will go in terms of price discovery, we have to start thinking about the fact that we need a pullback or a little bit of a cooling off period at some point. And, this could run into the halving. Again, it all depends on how quickly we get to these levels. If it takes a few weeks or even a month to get to $83,000, well, then maybe we might not get the pullback that we were expecting. But if it runs to $83,000 in the next week or two, or three even, prior to the halving, yeah, I'm going to be expecting a little bit of at least a sideways movement, something like this structure right here. I don't think that would be too terribly surprising to get something like that. But anyway, to sort of complete that thought, the reason why this $82,000 to $83,000 price level is interesting is because it is, it's again the very top, the 4236 on this most recent peak and dip structure. So the fib retracement on the peak that we made on the news leading up to the ETF back in January, and then the subsequent drop down to about 38,400, 38,500, somewhere in there. The structure formed off of that on the fib retracement takes us up to 83. And for us to blow through that level, I think because of the action that we created here, the candles that were printed, for us to blow through $83,000 like it's nothing would probably be a euphoria phase that even I'm not expecting. Like I'm expecting Bitcoin to do some pretty impressive things. It's already done some pretty impressive things, but if it blows through this level, I mean, we can get a wick that shoots up to $95,000 for all I know. But if it does that, if it blows through this 83 level and just keeps going, I would definitely expect a retest of, at the very least, the top of this structure here at 64. Maybe even a little bit lower. It could even go, I could even see it going below $60,000 at that rate. I could see it going back below $60,000 anyway, but these are likely to be flash dips that are very quickly bought. Again, after a red candle day, we are now up almost 1%. Ethereum is looking good. Until Bitcoin does something that we are not expecting, I think it's just stay the course. And the course is up and to the right. There is nothing that Bitcoin has done to make me think it's just going to roll over. It's not even printing structure that looks like it's about to roll over. When you start getting this sort of thing, where it starts to curl over, or it's not doing that. We could get one of these here where it creates a falling wedge or a flagging pattern, but we're not getting this rollover structure, at least yet. I mean, we could get that soon. If it does that going into this $83,000 range, into the halving, and then toward the end of April, then I might start to think, we're going to have a little bit of a consolidation period. But historically, summer is a slow period for crypto. Now, that does not have to repeat this year, especially with the ETFs. Again, everything's going to be different. But historically, June, July, August are just not exciting months for crypto. Once we get into September, October, November, December, Q4 of every year, that's when things usually begin to heat up. And if we're going to be looking at some insane price levels, I would think that those levels would be achieved between the months of September and April or May of next year. So sometime between, let's see, where are we at? Sometime between, let's create some lines here. September. So let's put one there. And maybe like here or something like that. So if we're going to create some crazy all-time high numbers and things are about to go parabolic in a sense, and again, this was the repeated structure that we actually took from Monday's video and placed it here. And, that structure would correspond with somewhere within these dates between September of 2024 and the end of May of 2025. I would expect that to be where our peak occurs. Now, it's obviously a pretty, wide amount of time. We're looking at what, September, October, November, December. That's it's 9 months. It's a 9-month span. Pretty wide range to guess where the peak might be. I could be completely wrong for all I know. I have no idea. Again, this thing could just go up and to the right for the next 24 months, and then we have to reconsider everything we've ever thought about crypto and Bitcoin and all that stuff. But right now, I think it is still trading a little bit on previous structure. Even though the action is very unexpected, I think previous structure still matters. And, we are about to get to a point where previous structure will not matter because we will not have anything to trade on based on previous structure. We're kind of in... we're kind of getting to a point where everything that happened prior to 2020, let's say, or late 2020, early 2021, we're getting to a point where all of that previous structure almost isn't really going to matter much anymore. And everything that we're going to have to base our thesis on is going to be after this point, after this breakout in late 2020. So that's what we're looking at. Again, didn't want this video to be too long, so I think I'm going to end it right there. But that's where Bitcoin is currently set. We'll see what the next couple of days and weeks bring. And in the meantime, happy trading.